All right, everybody, welcome back to another edition of Market Talks with Dr. Stocks, coming to you from the Dr. Stocks live trading room, our Discord room, which you can access if you're interested in joining us. A great community of traders, all different levels of experience, where we trade together, we share trading ideas, and I tell you exactly what I'm trading throughout the day. I give you my entry price, my stop loss price, my target price, the reasons for the trade, and on and on. And then every afternoon, I jump on the live mic like we're doing right now, and we do some trader training. We look at charts, indexes, my watch list, the stocks I'm interested in, and market, just general market talk, all good stuff. And if you're interested, you can join us at drstocks.com. That's drstoxx.com. Click on the live trading button and you'll be able to join us from there. If you're interested in my daily market letters, click on subscribe. If you need a trading system, click on manuals. And if you want to learn how to trade for yourself, go to webinars and you're good to go. So before I get over to some charts, I wanted to show this chart right here. Let's get it a little bigger. There it is. All right, so this is a chart of the Mag 7. The Mag 7 are the Magnificent Seven stocks, the seven largest tech stocks at the top of the NASDAQ 100, which is a weighted index, the S&P 500, which is a weighted index. And these, of course, include the greatest and biggest companies in the world on the planet. Apple, Microsoft, Google, NVDA, Tesla, Netflix, Amazon, they're all in there, right? Those are the Mag 7 stocks. When those are doing well, the indexes go up, S&P 500 and the NASDAQ 100 especially. When those aren't doing well, you can have a broad market rally going on, but the indexes are going to come down because those guys are, if you take the Mag 7, they account for about 45% of the Nasdaq 100 and maybe about a third of the S&P 500 by weight, by volume. And so if you take those guys out, you don't have much left. So that's one of the reasons why you can get the market rising, and it looks like, hey, we're in a great bull market, but most stocks aren't that healthy. Most stocks are down below their 50-period moving average. Most stocks are closer to the lows than to the highs, and that's because the Mag 7 is over. It's overly represented in those indexes. So here's a concern. This is a short-term concern, nothing to get too worried about just yet. But when the Mag 7 starts to fall out of favor with the general market, you're going to see the indexes come down. There's just no way of getting around that. One way to determine whether it's falling out of favor is that the volume, that is to say the shares that are actually traded in exchange, both buys and sells in the Mag 7 is going down. When that is going down, we know that they're starting to fall out of favor. They're going down right now. In fact, they're down very, very low to a level that is concerning. Now, you can see on this chart, notice how when the volume, here's a 50-day moving average of the volume and a 5-day moving average of the volume, and you can see back in 2021, they were both going down. However, the market was still going up. Okay, so that can happen, and it can stay that way for quite some time. But consider that 2022 was a bear market. It was not a bull market, it was a bear market. You can see it right here, right? Pretty much the whole year, stocks were lower. So this falling off in volume of the Mag 7 preceded a bear market that lasted a good year. We're in the same place right now. We've been falling off for quite some time. Even as the market's been going up and up and up, we've been falling off in terms of enthusiasm and excitement about trading the Mag 7. And no guarantees that this is precipitating a bear market. I don't think it is, because we've got too many potential tailwinds for the market going forward, right? We've got an administration that's going to be very pro-market, pro-big business, pro-small business, trying to get the interest rates down to stimulate the economy, and an administration that is going to start lowering taxes and cutting regulation. all of those are good overall for the market. Now, they're not going to be spending as much money because they're also trying to streamline the budget and try to balance the budget. So that's a bit of a headwind, right? When the government is pumping money into the economy in various sectors, the economy can do well even if their underlying fundamentals aren't so good. But if you fix the fundamentals by lowering regulation, lowering taxes, lowering corporate rates, you're going to have a good stimulus there to overcome the lack of government spending. And also, government spending is a two-edged sword because it does create inflation, and that raises interest rates, and then the whole thing can snowball downhill. All right. All that is to say, though, that this particular indicator we need to pay it respect and realize that the drivers of the S&P 500 and the Nasdaq 100 are starting to fall out of, actually not starting. They have been falling further and further out of favor, and that in the past has precipitated a lot of selling. I don't think we're going to see a lot of selling, but I do think we're probably setting up pretty soon for a multi-week pullback in the market. Okay, so there's that. The other thing I wanted to show you, and I'll have to draw this out because I couldn't find the chart. Let's first of all put on one of our indexes here. Okay, we'll talk about this chart in just a moment, but here's what we're seeing. We're seeing an exceptionally high level of inflows among retail traders. Retail traders are traders like you and me, right? Mom and pop trying to take your dollar cost averaging into the indexes. You're buying a few shares of Apple whenever you can afford it. Maybe you're nibbling a little bit on Bitcoin. It's you and me. We are the retail traders, and we're getting more and more excited about the stock market. We're putting more and more money into the stock market. At the same time, we are seeing a decline, a big decline in commercial traders. Those are the big guys, right? The guys with deep pockets, the fund managers, the hedge fund managers, the wealth houses, the asset managers, and all that. They're starting to pull out of the stock market while the retail traders, you and me, are trying to go into the stock market. Now, when that happens, when both of those things are going in opposite directions, typically that marks a top in the market. Doesn't mean that we're right at the top. We could keep going higher for another 2 or 3 months, which is probably what we're going to get. But we're pretty close. I have to say, we're getting kind of close to a prolonged market contraction at the least, or market pullback at the most. I don't think we're heading into a bear market. There aren't any. You typically get a bear market after a bunch of bubbles, right? You get a whole bunch of big inflated prices and inflated PE ratios and all kinds of things. Things get just way too exuberant, and we're not there yet. We're not there yet, but we could get there in a couple of months. We might be heading into a blow off top. Then we lead into a 8, 10, 12-month bear market. Now, bear markets are not a problem, right? We're traders. So we make money when the market goes up. We make money when the market goes down. Yes, it is easier to make money when the market is going up. But when the market's going down, we have to take a more cautionary approach. We don't get too heavy into any positions because those bull market rallies in a bear market, right? The bounces in a bear market can be really, really painful if you're short. But we can nibble on some shorts. We can go into some index funds that are inverse to the standard funds. We can sell calls on our long shares, and we can do a whole bunch of things that are a little more on the conservative side and are profitable in a bear market. We made money in 2022. We made money in 2018. We made money in 2015. I'll have to be honest, I did not make much money in 2008. That was like the bear market of all bear markets, just absolutely painful. And I kept trying to buy those dips, and it just was stupid. But we can, I've learned my lesson, right? Learn the lesson, and we'll be much more cautious, as we have been in all those other bear markets I mentioned. All right. So with that said, let me get back to the chart. So this is the S&P 500. We're printing a little doji top today. We are right at a trend line. It's not the dominant trend line, but it's pretty close to it. And we're showing just a little bit here of some bearish divergence. By little bit, I mean we just have one indicator that's showing bearish divergence. So I have to say, though, this is the stochastic down here at the bottom of the chart, and it's lower than the previous uh, high, and the price is higher than the previous high. So it's starting to work into some bearish divergence. Volume balance is still very good. So we're not seeing much in the way of distribution. So if we do get a pullback from here, and I think we probably will, it should be pretty short-lived. Probably will only come back down to the 21 period moving average, if even that far. And after 2 or 3 days of some painful selling, we should then start to see some nice buy setups setting up, and we can go from there. But I do think tomorrow has the real potential of being a negative bearish catalyst. So we have to be careful how we position tonight before the close. That's why I want to get off the mic a little bit early today, and we'll go from there. We've got most of our positions are long right now. We want to make sure that we can not lose our shirts if things really go south tomorrow. Okay, so S&P 500, short term, near term, um, potentially bearish. Not that it can't keep going higher, but it's the probability of it going higher is lower than the probability of it moving lower. So let's put it that way. We were only playing probabilities. That's all we have. That's all we can go on. So we've got a small loss in the S&P. I'm sorry, the NASDAQ 100. And the thing to note here, and I know there was a request to explain my chart parameters. I'll do that in just a minute. Let's take a look at the NASDAQ first. Let me get this this divergence indicator off so you can see this more clearly. We are printing today, if we hold right here, a classic reversal bar. Classic reversal bar, which, is a very short-term indicator, and they don't always pan out the way they're supposed to, but it is something that we should take note of. Classic reversal bar, a bearish reversal bar, is one that opens inside the range of the previous day, travels north, takes out the high of the previous day, and it has to be at least a 20-period high. This is an all-time high earlier today, and then travels south to close below the open and again within the range of the previous day. Right now, if we close here, that's exactly what we've got. Um, where would be another example? I guess that would be a classic reversal bar. That's not, because that's a green bar, but that's a classic reversal bar, and then it led to several days of downside movement. We've also got, coupled with that, as you just saw, some bearish divergence. So S&P 500, it's not quite a classic reversal bar, but it is a doji. A doji is indecision on the market's part. And if you're up here at the top and you're indecisive, indecisive markets tend to fall. Decisive markets tend to rise. So this could be a potential reversal signal. Now, we saw the same reversal signal on Tuesday, and then Wednesday was a really nice up day. So the market can do whatever it wants. It has a mind of its own, and it's always discounting and consolidating all the data that comes through each day throughout the day. And there are always catalysts that we never can take account of, that we just don't know about. But at the moment, right now, it has taken account of all the information that is available to the market and is saying we don't know. We are undecided about what the next direction is going to be. And so that usually means that market makers, market traders, the big guys, are likely to start pulling some money off the table. All right, the small caps are down the worst today. Big red stick day in the small caps, coming back in quite heavily, down about 1%. We had a nice looking potential reversal bar yesterday, but there's no follow through on that today. So we've had this sort of rounded top, right? This is it is, I guess we could call it an Adam and Eve top, right? The Adam and Eve bottom is where you have a V bottom followed by a rounded bottom. That's Adam and Eve, right? Hopefully you can make the connection. And an Adam and Eve top is just the opposite, a sharp top followed by a rounded top. And that's where we're at. And this is a bearish pattern. Um, and typically they will follow through by a fall to the nearest level of support. So we've got the 21 period moving average, which acted as support quite nicely on the last pullback. We've also got the midline of the LRC. We've got the 50 down below that. I don't think we're going to get that far, but it's possible. And then we've got the pink zone of the uptrending LRC, and that's 2.0 standard deviation. And usually if we get all the way down there like it did here, we get a nice bounce back up. So we have to take this one day at a time. Now, we are already long TNA, which is the 3x bullish version of the small caps. We've been in that in an income play. We're selling puts on that every week, and we've been making lots of money on it because it's been doing really well. But we may have run out of our luck on that one. So we'll have to see where we're at tomorrow. That's when we do our rollouts. We may just close it up for a few weeks and let this play out. All right. Okay, so that's all I wanted to tell you about the indexes, but let's take a look at my chart parameters. So these do change from time to time, especially the indicator I have down here at the bottom. I tend to rotate in and out of the RSI, and I use a 5-period moving average on top of that, sometimes a 3-period. RSI set at the default 14 periodicity. I use a slow stochastics with a 2 smoothing factor and a 14 period look back, and the MACD at the standard default parameters. Those are the 3 momentum indicators I typically have at the bottom of the chart. Right now it's stochastics. For moving averages on the daily chart, I've got the 21 EMA, the 50 SMA, and the 200 SMA. I do like the 21 EMA because it's very responsive to current price. A lot of traders, short-term traders, will use it as a place of support and resistance. And the old adage is price above the 21, good things happen. Price below the 21, bad things tend to happen. So it's kind of a good way of having that on your chart. Now, if you're looking for a bullish chart, you want to look for 2 things. You want to look for the 21 above the 50 above the 200. That's one thing. And you want to look for the LRC uptrending, which is the second thing. Now, the LRC is a linear regression channel. I just use the standard 100 period look back, and I have it at 2 standard deviations, 1.5 and 2.0. When you put them on top of each other, you get a nice pink band at the bottom. That's your 2.0 standard deviation to the downside, and a powder blue at the top, 2.0 to the upside. And my mantra is, buy the pink in an uptrend, buy the pink in an uptrend, buy the pink in an uptrend, sell the blue in a downtrend. Now, if you're buying the pink in an uptrend, it goes all the way up to the blue. That's your time to get out, take your profits. You can play the bounce off the 21 period average, but when it gets up to the blue, take your profits, right? So the blue gives you a nice target zone if you're unsure of where the price might go. It's not common for it to get above 2.0 standard deviation, especially in an uptrend. The market just has these oscillations as valuations kick in and people are profit taking and all the kinds of things. And you don't want to hang on to your winners too long. My greatest fault as a trader is that I tend to sell my winners too soon. We've seen this already this week, right? I got out of a couple of plays that just kept going higher. But that's probably the least damaging problem to have as a trader. The worst problem to have as a trader is to hang on to your losers too long. And the second worst problem is to hang on to your winners so long that they become losers. So you don't want to do either one of those things. All right. Okay, so standard deviation, moving averages. I also typically look at a chart like this. So I've got the daily chart over on the left, the hourly chart, sometimes the 2-hour chart over here on the right. on this chart, I've got a number of other things, right? I do have, I usually put on the divergence indicator on the daily chart. On the hourly chart, I've got the divergence indicator. I have a proprietary indicator that gives me notations of volume shelves for support and resistance uh, that a friend of mine put together. I'm still not convinced it's worth using, but I have it on there nonetheless. I've got this market bias indicator right here, which I have it set, I think, at 100 look back period, and it is green in an uptrend, red in a downtrend, and it's either dark green, light green, dark red, dark light red, depending on the severity of the trend. I've got the LRC, and then I've also got the what I call the bands, these moving averages here, 34 EMA set at high, low, and close. They typically give you a nice area of support when the price comes down into them and resistance when the price goes up uh, from below into them as well. Right? So there's resistance, 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 resistance. So the 34 bands, you can also just take a quick look at them and you can see, are they going up or down? Are they flat? Flat is a trading range, up is an uptrend, down is a downtrend. All right. Also, volume bars down to the volume. Very important to have your volume bars on there. I have these color coded green and red. If the stock closes above the open, it's a green. If it closes below the open, it is a red. And I like to say, look back at the volume balance. Are you seeing more reds than greens? That's not so good. If you're seeing more greens than reds, that's good. That's bullish accumulation. And are the greens taller than the reds? More volume going into the stock than coming out. All right, let's take a look at my quickly at my greens list. And we'll start with the worst to the best. And there are probably a few on here that shouldn't be on here. Most of these are not ready to go yet. Let me just give that as a caveat. They're on the list because I'm waiting for them to do something, set up, and give me a buy signal. I'm not going to explain that, but there are ways of looking at a stock and you can see, is it ready to go or do you have to wait? And if it's ready to go, then you need to find the setup, the buy signal. So ARM, I'm waiting for this little wedge here to break out. We've got a very slight uptrend of the LRC, and this has been a shift over time. It was pointing down. Now it's starting to point up, and that's a good thing. That's a rolling over from bearish to bullish. We don't have the stacked MAs, right? The 21 is below the 50. That's not exactly where you want it, but at least the 50 is above the 200. The price is above the 200. But we're getting very tight in this little wedge here. And until that breaks out, ARM is for me a no-go zone. And it's very, very possible that we'll break to the downside and give us a double bottom. AMD, this is not at all ready to go on the daily chart, but I have it on my watch list because the weekly chart will show you if I can get rid of all this stuff. The weekly chart will show you that we are in a pretty good looking uptrend, right? The LRC is up, the 200 period moving average is up. We have oversold stochastics, and we're down here at support on the weekly chart. So it's not ready to go on the daily chart, but the weekly chart is showing me that, hey, maybe the next big move for AMD is going to be a big breakout of that falling wedge because we are in an uptrend. We're just waiting for it to get out of the pink zone. Buy the pink in an uptrend, sell the blue in a downtrend, but it's not giving us on the daily chart what we want to see. And today actually looks pretty bad, I have to say. This is not a good looking day for, after a good looking print yesterday that gave us like a 2.5 week high. Today, complete reversal of that, complete lack of follow through. So we're probably going to have to go down here to about 136 again. We'll form some support, and then we'll see if it can't get back up and start to tackle this resistance line at the top. All right, enough about those guys. The rest look pretty good. So DRS, I like this little bull flag right here, setting up quite nicely. Coin, we're out of coin now. How did we do this? I guess we I raised my stop to protect profits because we were in it yesterday. Got in at a good price, like 319. It opened up above 340. I moved the stop up to 334 to protect those profits, and we got stopped out on this gap and crap, big gap and crap, and everything Bitcoin related was doing the same thing. Then it started to bottom out, and on the hourly chart, got a modest, very modest buy signal, which we took. It got off to a good start, and then it crashed back down and took us out. So we made almost 5% on the upside. We lost 1.5% on the downside. It's a net win on coin. It's not ready to go right now. That gap and crap is going to take some time to work out, and in fact, I probably should just take it off my my greens chart. WAGS, nice looking consolidation. I like how it's wedging quite nicely here. We're into the apex. Apex setup is very, very good, very powerful upside when it is in a dominant uptrend, and this is clearly in a dominant uptrend. You've got the stacked MAs, the LRC is rising. CMA. So we did trade this one a couple of weeks ago on that breakout. Nice little trade, waiting for it to do the same thing again. We were in Carvana. We took our profits. It's ready to go, though. I was just being very cautious. We got out this morning on a little bit of a ramp. It kind of went down initially, then it went back up again. We sold into strength. That was a good place to get out, and we're now a little bit below that currently. We're back inside the apex. We would like to see this break out. You can get a good 10 to 15 to 20 handle pop in this thing. I thought we would catch it today, but the market is not cooperating, and I think we're just not in a good place for the market right now. We're just too overbought. We're long NVIDIA with a premium position where we're selling put premium every week. We've got it covered with a protective put. It's called the diagonal debit spread. We'll talk about that tomorrow when we roll them out. I think we can roll out NVIDIA again for another week. It looks pretty good. So there are several financials that look exactly like this, right? They were up at 52-week highs. They've pulled back into potential support, waiting for these to break out. You've got COF, you've got DFS, you've got Schwab, SCHW. Those are all showing the same kind of setups. I do like FAS. We're long FAS as a swing trade, and that's one way of covering all your bases, all your financial bases. Same setup with FAS. So Shop is doing this little, I don't know what we would call that, but here's the setup. It's what I would call a power gap, right? You gap way up on earnings or some good news to a 52-week high. You don't close the gap even though you test it, and then you have to find a place of entry. I haven't found a place of entry yet. The best entry would have been down here, of course, on the pullback, but we're well above that now, and I don't think right now is a good time to get in. Cloud and software names are good. They're really solid. CRM was a big part of that. So, I wouldn't look at big blue chip tech right now or the mags, but I would look at some of the cloud and software names. And Microsoft has been lagging, Google has been lagging. Those guys will probably start to play some catch up. We are long owl on the little breakout here. This is a financial play as well. Asset management been hot, 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 hot. And this is one of the best in the space. APO is the best of breed, and we're long that one already. FAS, here's a little FAS setup, right? 4-bar pullback to the 21 EMA, the midline of the LRC, a reversal bar today. It's coming in a little bit with the market, but it looks like 2 to 3 days of upside from here. This is a trading web, which is another in the asset management space. IBD loves this stock. They just added shares when it was up here this morning. It was up around 140, and they sent out a note saying, hey, we're going to increase our position in TW. They were already long on that little reversal, and they were long down here as well, and they added a little too late, but who knew that the market was going to come in this fast? But this is a good one, and it just is not not ready today for breakout, but we do have a 3-bar reversal off the 21 inside of a consolidation. That's usually a good place to get long. DOCS, I have this one in my trend trade letter. We've been waiting for this little sideways flag to break out. Today is breakout day. CCJ, which is brought to the room's attention by one of our members. It's a uranium play. Commodities have not been that great lately. Miners have not been that great lately, but this one looks really good. And, uranium has all kinds of geopolitical tailwinds. And here it is right up at 52-week highs, if not all-time highs, and it's looking really strong. And rounded bottoms. One of my the guys in my pro trader group likes to call this the Kardashian bottom. And rounded bottoms are bullish. They can sometimes take a while to actually break out. You get this kind of series of scallops going sideways, more or less, before they break out. But this one broke out here, it broke out here, and I think you're about ready to see another breakout coming. So we had Kava. I got out a little too soon, which I usually do, but we were waiting for this little yellow box to break out. It broke out yesterday and follow through today. I have a feeling we'll have a good chance of getting back on board. I may also put this one on as a DDS play or a wheel play for tomorrow. We'll see what it looks like then. But this should get back up to 170, right? The market on earnings said you are worth 170. You're not worth 140 anymore. And it's been a while, but it should be getting back up to that vote of the market. And Root was another one from the room that looks really good, right? Here's your power gap up. Didn't even come close to testing that gap at all. It's been all upside. Here's your first pullback, right? First pullback in a new uptrend is always the best one. And a reversal bar today. We're not above resistance yet. It could coil around in this little apex. It could roll over and fall a little bit further. You never know. But this does look like a potentially good setup for upside. This is a tiny little float, like 10 million shares are available, and about 13% of them are held short. So this one can really squeeze, and squeeze plays typically happen on breakouts. So when you get above a recent pivot high, that's when it squeezes. When you break out of a resistance line, that's when it squeezes. And so we'll keep an eye on that one. All right, guys, what time is it here? 11:44. I am going to need at least an hour. So I'll tell you what, go ahead. If you've got 3 or 4 charts you would like me to look at, go ahead and type in the ticker symbols, and I'll just take the first 3 or 4 of them. Let's take a look at EME. I recognize this ticker symbol. Oh, I like this one, but I don't know I don't know anything about the company offhand. So whenever you're looking at a chart, you want to kind of the very first question you want to ask yourself is if this is in an uptrend or is it in a downtrend? If it's in neither of those, then you're probably in some kind of a trading range. Trading range, you can trade really nicely with a trading range, but you always have to buy support and you sell resistance. With an uptrend, you've got the tailwind of the market behind you, and things just go a lot smoothly and easier in an uptrend, and you can make mistakes as far as timing your entry and putting your stop loss, and you still can do really well because the market's in this trend, right? We're trading the trend. We're trading with the trend. My old motto, in fact, I named my company this, befriend the trend trading. You befriend the trend until it ends. And so this is clearly in an uptrend. How do I know? Because the LRC is from lower left to upper right. That's one thing. You've got the stacked MAs, 21 above the 50, 50 above the 200. And you just look at the price. The price is moving from lower left to upper right. So that's very, very good. This is a beautiful uptrend. You've been in about a month-long consolidation. Here's your power gap, right? New 52-week highs. Never came close to closing it. A little bit of a retest, bounce back up, retest, bounce back up, retest. And we're now in the process of bouncing back up. I like this so much, I'm going to add this one to my greens list. So I would say this is certainly a hold if you're already long, and it's a buy if you're not. I like the volume balance in the recent trade. Yeah, there was some distribution in here, but it didn't get very far, right? It did not. The market did not get very far. We've got the oversold stochastic with a fresh buy signal. Just looks very good. Thank you for that. Let's take two or three more. You've got more than that, of course. Sorry, apologies for not being able to get to all of these. All right, you want to avoid this one. Yes, there is some uptrending action here with the LRC, but you've got the 21 below the 50. That's not so good, and a big red stick today. You've got to know why. Why is this happening? It's not on earnings. It probably wasn't a downgrade. They usually don't fall that far, so something bad is going on. I have no idea what it is. So if you're a Uber fan, you probably know. And no, this is not a buy. Not a buy. Um, the other thing you would want to look at is where are the recent places of support. You've got this cluster down here, but of course that is exasperated to the downside on earnings. I'm not sure where you would put your line of support. I guess probably right about there, and that's in the low 60s, and here you are in the mid 60s. So there's still some downside. There's no net under this guy for a while. So that's a complete no-go zone. If you're short, hang on to that because you probably get another 4 or 5 handles. But if it's not a good place to go long. I'm not even going to look at Baba because I have a trauma with Baba. Avgo. So I really like this company. Broadcom has been around ever since I began trading, and we used to trade it a lot back in the 90s and the 2000s. And it was always a very, very exciting trading stock. Now it's calmed down quite a bit. It's grown really big, and it's a big behemoth. It's not quite in the Mag 7, but it's in the Mag 15. Um, and it's a semiconductor space, and it's one of the few semiconductors that's actually in an uptrend. Right? Most of them, like Qualcomm and AMD and ARM and others, are in downtrends. So we're bouncing out of the pink zone of an uptrend. This is where you would want to buy it, especially on an inside day bar down there in the pink zone of an uptrend. That's good. You had a couple of days of nice follow through. You had a gap and crap yesterday, and that was we talked about this in the room, right? It was gapping up on Marvel's earnings, which was setting a fire under all the semiconductors for about 24 hours. It gapped up, but you knew where it was going to open. You knew it was going to open right at the 50 period moving average. And, you know, you don't buy there. In fact, you anticipate it coming back down, and that's exactly what it did. And some follow through today. Now, it's probably going to close the gap down to about 168. Then you would look for a buy signal of some kind. But you've also got earnings coming up. I wouldn't hold it over earnings either. It's frankly, um, compared to some of the better setups we've been looking at today, it's not one of those. So let's look at VRT. Okay, so you can see the difference here, right? You've got a nice cleanup trend, stacked MAs, pull back into the rising 21. There's your buy signal right there, a big green stick in the volume, an inside day bar, or it's not an inside day bar. It is actually. It's an inside day bar with a green candlestick, and then follow through the next day. So you could still buy it here. I don't think you're going to get too much out of it, but up here into the powder blue, 145, 146, which is actually not bad. It's at 135 now. So you could get about 10 handles out of it, I think, on the upside. Market cooperating. And this is probably one of those because it's got some, I'm forgetting exactly what this is, what space this is in, but I know that IBD loves this stock. It's been in their top 20, even top 10 off and on. And it's probably one of those spaces that will continue to do well, even if the mags start to sell off. Yeah, in fact, I like this so much, I'm going to add this to my greens list. It's been on the greens list quite a few times. Let's put it there so we can keep an eye on it. Yeah, I like that setup. It's a bullish setup. You could buy today. You can add a little bit if you're light, but you certainly want to keep trailing your stop up because that could reverse back down quickly, as anything can, of course. Zoom. Haven't seen this one in a long time. So we are in an uptrend. I'm a bit surprised by that. This, of course, had all kinds of tailwinds during COVID. Then it came way, 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 way down and was in a downtrend for a long time, just long-term bear market. And where did it stop? Yeah, right. No, this is all very flat. So there's your I don't know. It looks like it's. Let's go to the weekly chart. How did I get all the way back there? Wow, look how tight and long that base is. Wow. Okay, so this actually looks pretty good, I have to say. This looks pretty good, and I say that because one of the best, uh, one of the best setups is the bullish base breakout, and that's exactly what you've got here. Now, it broke out way back in August, September, tested it after a couple of weeks, and then it's been off to the races ever since. So the longer the base, the bigger the breakout, and this to me looks like it's in a new expansion mode at the fairly early edges of it. Right? Companies have expansion, and then they trough at the top, and then they have contraction because with competition or whatever, and then they have a trough at the bottom, and then they go back into a new expansion phase if it's a good company that's worth investing in. This looks to me like it's in a new expansion phase. I haven't followed much of what's going on in the company at all, but just from the chart basis, I can tell it's back in favor. Back to the daily chart. Let's see if we can pinpoint a buy signal here. Okay, it's a little bit of concern that it gapped up on earnings and then gapped way back down the next day. I don't know if that's a gap up on earnings or if it's the gap down on earnings. It looks to me like it could be either one. But anyway, it gapped down. Maybe it rallied up into earnings and then it fell and it was a beat, right? Because it's a green triangle. But these gap downs in an uptrend, especially when it's like a multi-month high that it falls from, tend to be deal killers for a while. So this is probably dead money for a good couple of weeks, maybe a couple of months. It's not a bad setup. I have to say it's not a bad setup, but typically when you have the gap down and then a consolidation, the next move is going to be another gap down. So I would wait until it gets maybe down here into the pink zone, something closer to 80. If you are long, it's not a horrible setup. There is maybe a 45% chance that it goes higher from here and closes that gap. But I think it's 55% it's going a little bit lower. If you can hang on and set your stop at around 79, 78, 80, something like that, you should be okay with it going forward, but you might have to sit through a drawdown for a while. Let me do one more and then we'll call it quits. Amazon. Well, here's a great example of my selling too soon. We were in Amazon earlier this week, AMZU, the leveraged version of it, and we sold out yesterday. We took our profits, and it's higher today, so a little bit too soon. But we took profits into strength up in the blue zone in a market that is kind of ready to roll over, at least for a few days. And that was a smart thing to do, but the market has its own mind and it is continuing higher. It's not a buy here, way too much risk. And after all that we've seen, it is likely to come back in. But this is a very good chart. Amazon is up at all-time highs, and it probably isn't going to come back in very far. It's a hold for sure. You just have to, I would take some profits off the table, trail your stop up to just inside that gap, around 215, and go from there. All right. God bless everybody. Have a great rest of the afternoon. I will produce this video, send you a link, and we'll be back in the room in just a few minutes. Bye for now.